Multifamily sales are down. Has multifamily hit the bottom? This is the beginning of it hitting the bottom. What is happening, DeRosa Insiders? This is Matt Faircloth here. Welcome to the Cash Flow Digest Show. Our company is the DeRosa Group, and we're a company that's dedicated to transforming lives through real estate. We do that by creating phenomenal residential communities for our tenants. We do that by creating exponential returns for our investors, by creating just really exciting places for our employees and our staff to work in because they know that what they're doing is making a difference. We all want to make money with our investments, with our returns, with our jobs, but we also make a difference. That's what we do, and that's what we want to teach you to do here on this Cash Flow Digest program. If you guys want to hear more about DeRosa Group, just go to our website, DeRosaGroup.com. If you guys want to watch us live too, you can go to DeRosa Insiders on Facebook and join that free community, and you guys can get on and ask me live and give some shout outs like people are doing right here, right now on the program while we're watching. People are interacting with me. It's great. Broadcast every Friday at noon Eastern. You can also watch this program on Spotify, whatever way you're doing it. I'm grateful for you, and I'm grateful for you guys being a part of this community in whatever way that you're doing it. And please express your gratitude back to us by liking the show right now. Give it a 5-star review and write something nice about us. We love to have nice things said about us. So please do that, guys, right now. Got a really interesting current event I want to talk to you guys about. And I really want to hear what you guys have to say. First, let's talk about this. There is an interesting question that's coming up a lot in the real estate market is multifamily sales are down. The number that this market, the article here talks about is the sales are down something like 70% in Q2 as compared to Q2 of last year. So that means that the sales, the number of transactions, just for assumptions, if there were 100 transactions at this point last year, there would be 30 transactions at that point through the entire quarter this year, right? So that means a lot of people are not selling. It doesn't mean necessarily prices are dropping, but it means that the multifamily transactional volume has decreased, right? Well, the article, of course, talks about the reasons why that is, right? And if y'all might want to guess, right? If you guys want to type in the comment section straight up, it's because interest rates. Disclaimer, this is what Matt thinks. What Matt thinks is that there is still a major disparity between buy and sell, right? You don't have a transaction unless there is a meeting of what a buyer thinks something's worth and what a seller is willing to let it go for, right? If I want to sell you a banana and I think I want to sell that banana for $5 and you think that banana is worth 20 cents, we don't have a sale. We don't have a deal, man. I'm walking away. That is an example of a buy and sell not at the same number. And that means you don't have a transaction. This happens a lot on Wall Street where there is a bid and an ask on a piece of stock, and that stock does not sell until the bid and ask meet. I believe the problems that exist in multifamily are that the bid and ask are not together yet. And I think that is why multifamily is not showing any transactional volume. That's why the Q2 issue is what it is. This article, I think, is a good article and it provides good data. But this article, it says, has multifamily hit the bottom? True answer is no, it is not. The multifamily has not hit the bottom. This is the beginning of it hitting the bottom. Transactions dropping are the beginning of the dropping of prices, because what that means is that, okay, nothing's selling. And so for sellers that need to sell or want to sell or whatever it is, they're going to have to start dropping their ask. That's what's going to have to happen. I don't think buyers are being too unrealistic. Maybe there's a little bit of greed out there on the buying side, trying to take advantage of the situation that they think exists. But for the most part, I think that sellers that have been able to profit take and drive the multifamily market, the multifamily has been an absolute seller's market the last, say, 5-6 years, right? I've been in business as a real estate operator for 18 years. There have been things that have never been in the real estate market that I've ever seen that came in the last 4 to 5 years that are 100% driven by this being a seller's market. I'll give you a few examples, right? Back in the day, if you wanted to buy a piece of property, you would put up a earnest money deposit, EMD, right? And that money became non-refundable at a point in the process, typically after your due diligence inspection of the property was done and everything like that, right? The last couple of years, that earnest money deposit, all of it or a portion thereof, has become non-refundable the very first day. So when you put the property under contract, you issue a check for your earnest money deposit, which back in the day was just meant to show that you were serious, just meant that you had some liquid that you're willing to put into the game, not money you're willing to lose, right? That a lot of that money became refundable through terms of the contract. But the sellers have been able to drive it to the point where if you walk away from this deal for anything, that money becomes mine. As the seller, right? That is 100% seller benefit. Of course, that does nothing for the buyer, right? And so the EMD, it's called EMD going hard, or a portion there of money hard day one. That concept I've never seen until the last 5 years, right? Now, what's interesting, that concept has not gone away, right? We don't hear about that much anymore. We're selling a property right now. There's no money hard day one. There's money hard 30 days in once due diligence is over, which is what I'm used to seeing. We've had to play ball. We've had to do EMD hard day one the last 5 years as a company ourselves because this is where the market was. That has shifted away. We don't see that conversation as much. The second thing is in the last 18 years, when you made an offer on a piece of property, you had these things called contingencies, meaning like, well, I'll buy that property as long as these list of things come true, which is meaning like, hey, well, I do my inspection, everything comes good there, and I'm able to get financing at this interest rate. And on a small residential deal, it's very clear. You would list out, I can get financing this interest rate, the property appraises properly, this, all these things come true, right? The concept of a financial contingency has gone away in the last 5 years. You weren't allowed to, when you bought a piece of multifamily property, you weren't allowed to say anything about what had to happen. And like a couple of years ago, we had sellers say, well, no, you can't say whether the property appraises or not, right? Well, what if the appraiser says it's not worth what I'm buying for it? It's a neutral third party. I probably should listen to them. The seller says, no, that's what I say. That's what I want for the property. Doesn't matter what the appraiser says. That's crazy, right? That got removed from contracts and stuff like that over the last 5 years, but that also is coming back in. So I'm seeing a lot more concessions that sellers are having to make. Like I said, money hard day one and finance contingencies. That is just the beginning. And I think they're going to have to really start making real concessions on pricing before you start seeing multifamily transactions come up to the point where they should. We have a healthy, thriving market again. We do not right now. Prices are not where they need to be to see transactions for sellers to be happy and for buyers to be happy too. So we're just not there yet, but we're going to get there eventually. That's just how markets are. They just tend to shake out the noise and they eventually get where they're supposed to go. So Matt's prediction is multifamily is not at the bottom yet. It'll get there. It's not going to crash, but it's probably due for maybe another 10, 15%. And you might see some spot deals that are really, really distressed deals sell for much, much less than that. But I believe the multifamily market overall needs to come down by about 10, 15% before it really, really settles into a healthy market again. Yet again, this is what Matt's crystal ball says. Take it for what you want. If you guys have comments that you'd like to make on where you think the market's going, please leave it in below. Leave it in the comment bar here on the live feed on Facebook. We'd love to hear from you guys, or leave it on our DeRosa Insiders channel when you guys join. We'd love to hear from you guys there too. So that's what I got on the current event of a multifamily. So if you guys have any thoughts, we'd love to hear from you. Thank you for being a part of the DeRosa community. Hey guys, Matt Faircloth here. Thank you for listening again to the Cash Flow Digest. I really appreciate you guys doing that. If you guys want to hear more about what DeRosa Group has to offer, go to DeRosa Group, DeRosa Group.com, DeRosaGroup.com online. You can hear about all the great things that we offer from an educational standpoint and passive investment standpoint on our website. See you there. And if you guys want to join our online community, DeRosa Insiders on Facebook, where you can watch this program get recorded every Friday at noon Eastern, and you can come on as even a guest or ask questions on the show. We hope to see you guys on our online community, DeRosa Insiders. See you there.